Last month, CMHC released its rental market report for 2022, causing a stir in the news about massive spikes in rent. Yes, rents have gone up a lot in the past year, but if we look at things through a longer term horizon, there's actually a lot more to it than the headlines. So in this video, let's take a closer look at actual rent trends to help you better understand how they might be affecting the housing market. But before I go on, check this out. This is a heads up that you can get our complete Toronto real estate investing guide for free on our website. You can see things like a breakdown of typical costs, rents, appreciation, sample financials that you can change up to see how it affects your returns, and even try out a quiz to see what might fit you best. I'll put a link to the free guide in the description below. Don't forget to like this video and subscribe to our channel so you don't miss other content like this made just for real estate investors in Toronto. Since 2020, we actually saw a huge drop in rents and then finally a recovery last year in 2022. And if we take the timeline back to 2018, you'll see that rent growth since 2018 hasn't actually been that outstanding compared to our CPI. CMHC condo rents were slightly higher than the CPI. Food, transportation, gasoline, and energy prices all rose more than rents in Toronto. I like to get a better picture of the rental market usually, since a lot of leases don't actually get done through MLS, so CMHC doesn't have this data, especially the more affordable rentals. So to get a more complete picture of the rental market, I went over to Zumper to see their data to fact check things. And here's the data for one-bedroom rents from Zumper, and as of the end of 2022, we actually haven't even fully recovered from the peak rents set back in 2018. And it wasn't until early this year in January and February that we finally moved past this point. Now, what caused a lot of buzz was this highlight from the CMHC report that says the average two-bedroom rent on turnover went up by 29%, whereas if a unit didn't turn over, there was a big difference with an increase at 1.2%. This statement is sort of misleading, so let's go back to the rent chart to understand things better. The first thing to note is that there are huge swings in Toronto rents, so timing can make a huge difference. For example, the low in Q1 of 2021 for a one-bedroom apartment was $1,750, and at the end of December of 2022, rents had risen to $2,300, so that's already more than a 29% increase. But here's the thing, rents in Q1 of 2021 were actually abnormally low. Basically, whoever locked in rents then got an amazing deal. And the last time renters saw those rents was in late 2016 to early 2017. And if you end up plotting rents on a chart and drawing a trend line, you'll see that despite the huge swings, the average rent growth is around 3% per year, which is actually in line with inflation. There are a few more interesting things that I do want to share with you to give you a better understanding of the rental market. First of all, falling interest rates typically make real estate prices go up and rents come down. Rising interest rates do the opposite, and the reason always goes back to supply and demand. With lower interest rates, you'd see more renters become homeowners and more investors get into the market. So what this does to the rental market is free up rental supply from existing renters and encourage more rental supply creation from investors. And this increase in supply is what ends up pushing down rents. Then during the pandemic, with a lot more work from home, renters ended up moving back home, and that also freed up rental stock. And this is the big reason rents came down. Now, the effects are unwinding. Rental stock is shrinking. Renter demand is going up, and that's the big reason why rents saw a huge surge last year. Digging into Zumper data more, it also looks like bigger units usually see more volatility compared to smaller units. One explanation might be that there's just less bigger units for rent and less renters for bigger units. So because there is less activity, they end up seeing bigger swings. And perhaps because of the same reason, we also see a lag in rental movements compared to these smaller 1 to 2 bedroom units here too. Now, just like real estate prices and overall inflation, it's hard to tell where rents will be by year end because inflation is pretty unpredictable. The BOC predicts that shelter inflation will continue to be strong for the rest of this year, but the rate of increases should slow down into Q2. Beyond that, they don't give too many more details, but they do say that rents should ease quicker than other services. This could be the case assuming that our supply growth can meet growing demand from our huge immigration targets. Once rates hold stable at much higher levels, the real estate price adjustment downwards will eventually make things more affordable and attract more buyers, which would further ease the pressure on rents and level things off. And because so much of the rental market is dependent on supply and demand, it's important to continue to monitor these dynamics. There's been news recently that housing starts could be slowing down, which could be a huge problem. Developers have been postponing projects until they secure enough buyers, and in this market, pre-con sales are just not nearly as popular as before. We're also seeing building delays simply because borrowing costs are too high to build right now, and so this is something definitely to keep a close eye on, which might end up taking rents one way or the other. In the ideal scenario, interest rates will start to come down next year, and that should help to speed up the rental supply creation again, and that's going to be needed if we're looking for more normal rent growth moving forward. We just talked about rent trends, and there's also price trends, other inflation trends, interest rate trends, hoops to jump through on the mortgage side, plus things to think about on the renovation side. So we know real estate investing can be pretty intimidating, especially for new investors. But that's why we're here. If you're looking for an expert to help you navigate through all of this in Toronto, we're happy to chat. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto, and here's how it's like to work with us. First, we'll do a discovery call with you so we get to know each other more and help you get your financing ready, and then we'll teach you how to analyze deals. Once you're set, our sales team will work with you to find the best opportunities on the market and eventually help you buy the best one for you. Houses typically need a bit of renovations and we'll help you with a detailed scope of work and contractor connections. And then once you're ready to rent out the place, we also have leasing and property management services if you need it. So if you want to learn more about any of this, just head over to our website at the link down below. Again, don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. You can also head over here to check out our other videos. Thanks so much for watching and see you in the next video.